Alright, hello everyone, so welcome to another weekly wrap-up video. So let's take a look at what's going on, well, what went on in the market. So what I said and what happened. So let's just put our screen into the research portal. Before I do anything though, let's do this now that we're here. In the research portal, right, if you don't know already, go into the start here area. Whoops. I've put here 2 downloads which you can download into onto your computer. It's a HTML folder. It's a zip file and it has 2 HTML text in it, which you can open up in your browser and it will look like this. This is the 5-step protocol. Okay, so if you're going to trade the way we're trading, what you can do is just do this 5-step protocol. It's really easy to follow. The second one is for money management, so it's your personal trading framework, and if you're doing any prop firm stuff, you can just put your daily limits and so on in there if you like, and because it's HTML, you can muck around with it as well if you want, and you can change it. All right, other than that, we'll also take a look at Cycle Edge to see how Cycle Edge forecasted things, and I've pretty much brought Cycle Edge to its final formation. It's still in beta because bugs do come up, but overall we're pretty much good to go. So let's take a look at what I said would happen for the week of 22 to the 22nd. Remember, I put this up on June 8th. So on the 8th of June, I put that up, and let's see what happened. So gold trade days, Monday, Friday. And I'm just going to put this light off. My wife bought me a wife. She said I look awful on camera, but I said looking good is not the objective. All right, let me just get rid of that. Okay, so let's see what happened. Gold Monday, Friday, Euro dollar Monday and Thursday, Friday. Bitcoin Monday or Tuesday, and we've got Sunday, which is tomorrow. Thursday, SP 500, Dow Jones Wednesday, Nasdaq Wednesday, and Friday. All right, and these are the possible energy vector days here, there. As you can see, we'll check them all out, not to worry. And these are the trading hours. Now remember, it's UTC +3 because I'm in South Turkey, and these are the hours for me, but you can go to any time converter on the internet. In fact, worldtimebuddy.com is a good one because you can just convert, you know, my location to yours. It'll just do it automatically for you. So here it is. That's Monday, Tuesday, or you can just take a screenshot and follow through. Wednesday, Thursday, Friday. Now because we're in the summer zone, summer time zone, the platform and my time, local time, is the same. Right? In winter it shifts an hour, but currently we're the same. So gold Monday, Friday, let's take a look, and let's also take a look at the hours. Now this is Monday. I've also made the Vimeo videos available for you if you want to go and check out the daily videos. It's not a problem. This is Monday. Now on Monday I said we could go up as well, but how can we go up if the market comes down into a trade hour? And if we figure this out, like, hey, you know, I want to go with this to the upside, okay, it was doable. Obviously we had a target down here between these price levels, but in any case, if you're doing an impulse pullback, you can see that zone is 37.5 to 25. So buying here to go up is also okay, but I will show you how timing can save you from making such mistakes, even if you are wrong, right? So that was Monday, and as you can see, this is Friday. Now I've also put an arrow down here on Thursday. Why? Because in the video I said Cycle Edge gave us also Thursday, guys, so let's keep our heads up for Thursday and Friday, okay? But according to just my earlier calculation, okay, before Cycle Edge, it was Monday and Friday. Okay, so we're good with that. So let's take a look. Friday market takes off. Okay, I will show you on Cycle Edge why it showed us on Thursday as well. Now here are the hours. I've already put them up for Monday, Tuesday, and Wednesday. Right. So remember, if you wanted to go long on Monday, right, The only time you could have really done that was if you closed the gap or you came back nicely. So if I was to do an impulse and a Fibonacci, which, as you know, according to our cycles calculations, we like a 37.5. Okay, sometimes I'll put Fibonacci and people say, oh, Fibonacci can turn around anywhere. You know, how are you going to know which level it is? We know because we got timing. All right, so time and price, they need to, you know, correlate. Okay, so, you know, some people don't like Fibonacci because they say, well, there are too many levels there. Yeah, there are too many levels if you don't know timing. Right, so here it is. Okay, so the market came back down. Now it didn't close the gap. Okay, remember, I'm always looking out for gaps when trading because market likes to fill them up. But let's say we did a boo-boo and we did trade at this trading hour on that bar. The market still went up enough to cover the trade. Why? Because if you get the timing right and you enter here, your stop loss should be just under this bar. Let's say you don't have a blue line like I do, does not matter. You got your recent low or 1 bar stop loss. That's it. Your trade would have been covered for sure. Okay, and then on Tuesday the market flops. At what time? These are the hours I gave on Tuesday. Look what happens here. This is important. Market first of all crashes down at just after the trading hours. But look what happens here. Another trading hour here, and we've got a sideways situation on a 15-minute chart. How are you going to manage that? You can box it, or you can say, wait a minute, trading hour, market closed down, next bar you sell off and follow through if you are following the trend down. Okay. And look where the market went down and down again into the trading hours. And then let's take a look. Did I have an 11 there? Because why do I want to take it 11? Yeah, see, I don't have 11 here. I've got 330. Why? Because 11 came up on cycle edge. But what I'm going to do is I'm going to get rid of that 11. We're just going to go according to what I posted. All right, so that's market coming down. Now if you take a look here, all right, I said after 9 o'clock, okay, Monday. Where are we, on a Monday? No, this is Monday. We're on a Tuesday. So let's take a look at Tuesday. All right, Tuesday, here we are. From 5:40 to 6:30, market can flow towards 350. Expect volatility at 5:15. If there's direction, go to 8:15, 10. So these are all valid trading hours. If I've got direction, every time the market comes up, I want to nail it down. If I'm going down, if I want to go up, every time the market comes down to my trading hour, I check the price. Price is good, we go. All right, so really simple, stupid. And this is how it is. So market breaks down at the trade hour because only two possibilities. We're either going to chuck a Yui or we're going to break down, breaking down, nice and easy. Now this is that 330, market going up, pushing down, going up, pushing down at the trade hours all the way into Wednesday. Why? Because that is an impulse wave. Once again, put your Fibonacci up. It's a 50% at a trade hour. Now you see why Fibonacci matters for us. Okay, you don't know if they're going to sell at 50 or 37.5. You don't, but you got hours. This is why the hours are important. So now I can sell off. Now if I sell off here, I just need to put the stop loss just above there. All right, and that's how you can follow it through. Okay. On Monday I was on the road. All right, so because I came to the summer house. So on Tuesday, Wednesday, obviously this week I had no time to trade because with all the excitement with the kids, we're all up and running around on the beach. All right, but as you can see, this is how things are panning out. So this is Wednesday. All right, Wednesday market again, trading hours pushing down, pulls back. Look at that. Trading hour, push down. Trading hour, push up. If your bias is to the downside, you sell when the market goes up. Once again, check this out. Market does an intraday impulse from the opening. Market comes back into 37.5 at a trading hour. Sell it off. Another trading hour. Look what's happening again. Let's get rid of that. Market is breaking down. Trade hour, push down. Do you want to box it? Yes, you can. If you box that hour time zone there, low, high, it's only 3 bars, market pushing down. What's that? From technical analysis we've learned, it's a goodbye kiss, and a goodbye kiss it is. Market comes down, another trade hour, sells off, another trade hour, sells off. We're just following the trend. But remember, every time the market comes up into your trading hours, if you're going down, sell on the retracement, okay? And if you're going to do the breakout, make sure you've got a target below that you're heading to. This is why technical analysis and pricing is important. In the new cycle edge, I've also incorporated pricing there as well. Now come Thursday, now in the videos I put on Vimeo for the club members in the members area, I said, guys, we've got to keep a lookout for Thursday and Friday. Okay, why? Because Thursday and Friday. Now I didn't put the hours here, but let's do it. Okay, so this is Thursday. Let's take on the full scope here. So let's do this. These are Thursday hours. This is Thursday and this is Friday. So I'm going to do Thursday first. Let's do it. I'm just going to move this to the next screen here. Thursday. Now we're looking for a trade day, a swing day. So I want to reverse now, right? Now the market's tumbling down, coming down, and you don't want to be holding a falling knife, okay? But according to our cycle analysis, it's also a trade swing day, which we want to, like, you know, get in there and ride it up, okay? So then the question is, at what price, at what time? So if you go to the daily, okay, we already have a price zone, as you can see, right? Where does that come from? Let's tighten this up. It comes from this zone here, remember? Remember the cause for the consequence. Cause for the consequence. So this whole zone, right, from there to there, okay, is a zone, all right, for us, okay? Now you might say, but this is huge zone. Yeah, but look, we're looking just to buy on Thursday and Friday. So if the market already went down here on Wednesday, what are you going to do? You're just going to come back into that closing and narrow things down, all right? Because you're not going to be thinking about buying unless it's a swing day, which is only going to be, according to my initial one, was Friday. I added Thursday because on Cycle Edge it also showed me a Thursday. All right, so no need to panic. And let's take a look at the hours. Thursday. What have I got here? Thursday, 6:15. What have I got? 2:45, 5:20. So 2:45. This is 2:45. Market coming down. Where to? 5:20. Anyone? 5:20. That's your 5:20. Market making an impulse on that 5:20. Nice. Next hour is 5:55. Beautiful, because that brings us down to 6 o'clock here. All right, 5:55 is there. You want to wait for the next bar, so let me do that. Next bar, market opens there, retest that, and from here again, it's taking off. Where to? 750. Where's 750? 750. 745. That's your 750. Market sizzling back down into some volatility expected until 9:15. So a little bit of volatility, chop chop, and 9:50. That's your 9:50. That's your 10 o'clock. Market beginning to start that shift up. What else do I have? Oh, sorry, not 9:50, 9:15. My apologies. Market coming down and, well, still in the same zone and starting to turn around. The next hour was 1:15 to 1:25. So let's go to 1:15. This is 1:15 to 1:25. It's going to be on the same hour there. Now you can see that's a high, that's a low. So we're in the middle of nowhere in terms of intraday timing. So what do? You relax. Okay, the next hour is 3:15. 3:15. 3:15 is right there, guys. Okay, what happened on Thursday? Anybody check the news? Somebody should have checked the news, because at 3:30 there was news. What happened? All you had to do was just block it in. Went up, boom. Remember, we're expecting a turn in the market. So the news, knowing there's news coming out at 3:30 and us having a time at 3 p.m., 3:15, is like, wow, that's a pre-trade setup. So if it does go anywhere up or down, you want to be in there. And that's it. But our bias is to the upside. So how could you have played that? Very easily. All you have to do is just draw your line. If we break out, that's where we're going. Okay, remember, this is also resistance on the intraday. Closing price off Wednesday, opening price off Thursday. Market breaks out, pulls back right in there. So that gap for the day is closed. All right, as you can see, breakout, pull back, going to the upside. Now that's 3:15. What else do I have for Thursday? 625, 625, 625, 625. This is 625 to 645, which is going to be there. Right, 645. So market comes all the way into there, nice and easy. It can keep going or turn around at 835. Where's 835? So there is 835 there. So the market can keep going or turn around, and it has mucked around here a little bit and then turned around, because the target was 835. Okay, so if you entered the trade there, if you day traded it, you would have been out in any case. Or if you wanted to wait for the closing, you could have just, well, you needed to push your price up, because I said target is 835 and closing. Right, so let's take a look at Friday and see how that panned out. Friday, 140. This is 145. That's 140 is on that bar, right? It's a 15-minute chart, remember? If you're using timing, 15-minute chart is good. Then I've got 11:10, 11:10, 11:10, 11:10, 11:10, 11 o'clock, guys. Now from here, as you can see, market is sideways, breakout. This is a perfect box case, all right? Because the market does a dip there, it's a high there, so you just need to do a box. Okay, whichever way we're breaking, that's your direction. Okay, and remember, our bias is now to the upside. Why? Because Thursday, Friday swing there, right? So we're looking to go up. Okay, so it's a pity I didn't have this low here. There's a reason I didn't have that low. I actually had that low for a price, because that was the gap, and I did mark it in. Okay, which was that red bar over there. Why? Because that was the cause for the consequence being the breakout. Okay, I trade cause and consequence. You might not have heard it anywhere else, because it's a flash name for breakout cause. Okay, so there's nothing like mystical about it. It's just technical analysis. So all these stuff, demand, supply, order blocks, support, resistance, it's the same stuff, just in mumbo jumbo words. Okay, and if you get those levels right, you'll be fine. So I call it cause and consequence because it makes sense. It is the reason for a breakout. So that's what the market caused. So if it comes back to that cause again, and it's a trade hour, it's a bingo trade. Okay, and that's your Friday. And then the market is going into where? 120, 125. 120, 125. This is where the market has broken out, guys. 120, 125. Okay, it's that zone there. And then I've got 320, and it says volatility towards 4 o'clock. This is your volatility at 4 o'clock, guys. Another opportunity to get in the game with a tight stop loss. Anybody who entered here, because look, we've got a breakout. Okay, we have gone higher than above the high of the previous day. Okay, so that's your trading hour. Get in on the next bar, tight stop loss under the white line, or that little wick on the 15-minute there, because you don't want to go below there if you're buying, obviously. And it goes all the way into what? 635. That's your 635 bar right there, making a top, and then the market sizzling down. Okay, possible target if it's pushy, okay, is 840. So 840, it was pushy, but 840 is, where is 840? 840 is on that bar, right? So the market kind of sizzled down into there. All right, so knowing the trade days in advance and the hours obviously will get you places when you're trading. If you want to see, let's take a look at the others if you want. All you have to do is just basically see what happens. So let's take a look at, let's make this a little bigger so we've got them side by side. Come on, a little bit more, a little bit more, a little bit more. Here we are. All right, so Euro dollar Monday, Thursday, Friday. Let's take a look. Euro dollar. Monday, Tuesday, Wednesday. Is that Monday? Monday, Tuesday, Wednesday, Thursday. Oh, Monday breaks down. Now I said this should break down into there, remember? So this is like, what did we have? This bar here was the cause, right? So there's your bar. Okay, either that one or that one. I think we had this one before. There. All right, so this is interesting to see. Why? Because that's your Friday, last Friday. Look what's going on with Monday. Bang down Monday, and then I've got a trade day saying Thursday, Friday, and look at Thursday, Friday. That's your Thursday, and that's your Friday. Beautiful. All right, so this is the kind of trading you guys with timing you can get right. Just check the hours. The hours are same for everything, but in cycle edge, right, when we're using cycle edge, we are going to have asset specific hours as well. You'll need to use these. You can use these with the mundane ones that I give, the overall ones, because I give overall hours. Cycle edge is doing for us like something specific for the asset, which is fine. I will continue to give the overall hours, so it's not a problem. Those daily hours are still going to be in the members area, and these I will start to give in July. I'm going to do a video on this, on how to use cycle edge, so make sure you watch that as well, especially if you're in the club area. Okay. And that's basically it. So let's see if it gave us any. It says it's a routine week. Okay, fine. Let's take a look at Bitcoin. Now with Bitcoin, I did a video and it showed us shock days. Just watch it if you haven't. It gave us shock days 3 days in a row: Tuesday, Wednesday, Thursday, and look what happened. Look at that: Tuesday, Wednesday, Thursday, Friday, Saturday. All right, so we're on Saturday now, but that was just great. 3 days shock days, and it was just showing it to us, you know, that there's a shock day. So it was like really good. Cycle Edge showed that to us, because if there's a shock day, it'll write it here. Okay, like on here it says routine, right? But if there is a shock day upcoming, we will see it. You know, routine means you go with the flow. All right, this is flow. You're following the trend. But if there is a shock day upcoming, let's see if there's something upcoming later. Nah. If there's something upcoming like a shock day, which happened for Bitcoin, it does show. All right, so we're down here, and I said you could follow it down there. It's no problem. Just match your hours if you're curious about the hours. And I talked about Sunday as well. Sunday is tomorrow, and that's basically it. Okay, so Bitcoin Monday, Tuesday, and look what I've said, drain day. Okay, Wednesday, Thursday, peak, Friday, Sunday, routine. So what does that peak mean? Peak doesn't necessarily mean it's at the top. It means it's at an end, like peak down, peak up, like it's at a edge level. And that's Wednesday, Thursday for you. Thursday, Friday, and Friday, Sunday, we're chucking a Yui. All right, so getting these right is important. Let's take a look at indices. Let's take a look at SP 500. Now with the SP 500 as well, I did say two things. I said, guys, we want to sell, obviously, right? But Thursday's a trade day. Wednesday for Dow Jones and NASDAQ, it's a trade day. So I said on Wednesday, right, if you wanted to, right, from a low, you could go up. All right, and that was it. Why? Because Dow Jones and SP 500 had a Wednesday trade day, and indices normally go hand in hand, right? So that was like, you know, if you really wanted to do that, you could, but overall we are selling, right? We want to come back down. In fact, we're going to come back down into these zones, right? So we're expecting the market to come down and break this zone, okay? So selling was also the way I said should be done, but SP 500 specifically, you can see here I had Thursday, all right? And on Thursday, the market sagged down again. Okay, so after the up move, markets went down on a Thursday, Friday. Okay, so just selling off routine. Just put your hours in there and you'll see how it panned out. Let's see, is it this week? Let's just push this forward. Here we are, all right? So if you take a look at the hours as well, okay, if you want me to do it on Thursday, let's take Thursday because that was a trade day, right? So Thursday, trade day. Let's take a look at the US session. What do we have? US, that is 3:15 my time, is 8:15 a.m. in New York, right? So 3:15, 6:25, let's see, 3:15. This is 3:15. There you go, that's your 3:15, guys. News coming out, boom. All right, that's it. Are there any hours? Did London do anything? Look, 115 to 125, 115 to 125, 115, that's your 115 there. 115, 125, let's say 130. So you can see the market's just not doing anything. It's just stopped sweeping and then boom, down. What could you do here? Easy, because you got news, you're boxing, and you can see the clean breakout comes here. It's just boom. Why? Because these are stop sweeps. Hasn't broken above that high there. Okay, nice and tight. Boom. What's that? Goodbye kiss. Nail it down. Same thing. Thursday. Let's take a look at Friday. Friday hours. Let's check New York again, just for the benefit of checking. 3:20 p.m. my time, 4 and 4:20. So Friday, 3:20. This is 3:20. This is 4:20. All right. So that's Asia support. That's Asia resistance. Market retests support at trade hours, going up into resistance zone, selling off. I wonder at what time. 6:45. Did I have a 6:45? I had a 6:35, which is that bar over there, guys. So this bar ends, that bar starts, market sizzles down. Market timing, all good. Right, so you can do the same thing for whatever you do in NASDAQ. You know, with NASDAQ, do I have anything special? Let's check it out. NASDAQ, Wednesday and Friday, routine week. So let's see. Wednesday, trade day. Friday, That is awesome. That is Wednesday. Market is down. All right. Market is down. Let's see on Wednesday what time they bought, because that'd be like nice to know, wouldn't it? Here we are on Wednesday. $10.45 Wednesday. No, I didn't have a 10.45 at all. In New York, 3:45, 5 o'clock, 3:45. This is 5 o'clock there. So that is just choppy. If you bought here, if you bought on that bar, obviously it would have gotten stopped out. But that's it, 3:45, 3 whatever. I think it was that one. 3:45, yeah. So that's your 5 and this is your 3:45 there, okay? So this is a place in that zone. If you sold off, that would have been okay. If you bought, not good, all right? But Wednesday, knowing it's a trade day, that is like a bingo day, because think about it, you know? What am I doing here? This is your Wednesday. All right. Market going up on Wednesday. Sorry, wrong Wednesday. All right. And then coming down into Friday. So it's the same setup as SP 500. What day was that? 11th of June. Let me just check my book for 11th of June. 11th of June was a Thursday. Week starting Monday the 8th. SP 500 Wednesday, Thursday. Trade day. So, yep, that's good. All right, 11th Thursday. Wednesday the market stops down here. Thursday takes off. So that was actually a trade day. Nice. Okay, so no loss of love there. But that's how it is. Wednesday. All right, so market shifting to the upside. Now, let's say we made a mistake, okay, because the market's to the downside. We want to sell the indices if you're watching the video, right? We want to come all the way into these zones, all the way down here, okay? So I want to see NASDAQ all the way down here, in fact, on that line, okay, all the way down here. So I am expecting the markets to go down, but let's say we made a mistake, right? On Wednesday we said, I'm going to go up, baby. Fine. When could you have gone up on Wednesday? Here. That was your only time you could have gone up. Why? Because that's Asia's spot market coming back in New York to a trading hour. This is the only time you could have gone long. If you said time and price, yep, on the opening price I'm going in, or on the next bar I'm going in, you would have been stopped out here if you went long, either way. All right? So it's a small loss even if you're making a mistake on a biased day. With Cycle Edge, we're going to have less mistakes because what I've done is like kind of segregated grade A, grade B, grade C trading, which means you're going to be able to take, let's see that, you're going to be able to take days when it's good, and if it's not a good day you can just chill out. It's going to tell you, look, possible swing day, 1 star. This one is 2 stars. So this is the 15th of June. This is for gold, right? So if I go to gold, '15th of June, 15th of June. That's your 15th of June, guys. That is where you start setting up for a sell, right? So knowing these is already bingo, right? So, and Cycle Edge tells you all this stuff beforehand. So I'm going to be posting the Cycle Edge screens, right, reports in the members area next week, I will still add the mundane hours as well, so you're not left without those. So the overall hours are still going to be added, so you will still get these hours and also my comments, you know, if it's helpful. But these are, cycle edge is going to be asset specific, so I'm going to do asset specific for the whole month for these 5 assets. And I can also do custom analysis as well. You can check out the website for that, and that's basically it. I'm going to do another video, like I said, on cycle edge and Ethereum. You guys have a good weekend and all the best.